Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a look at the latest developments in the tech industry, where giants like Nvidia and Apple are facing challenges due to fears about artificial intelligence. The S&P 500 Software and Services Index closed up 0.9% on Friday, while the S&P 500 tech sector fell 0.5%. This volatility is a reminder that the market can be unpredictable, and it's essential to stay informed to navigate these changes. In other news, Applied Materials shares jumped 8.1% after the chip-making equipment firm forecast second quarter revenue and profit above Wall Street expectations. Meanwhile, defensive utilities ended up 2.69%, and real estate added 1.48%, making them the top gainers among S&P 500's 11 major industry indexes. We're also keeping an eye on the bond market, where investors are weighing the chances of a 25 basis point interest rate cut in June. According to the CME Group's FedWatch tool, the probability of a rate cut has increased to 52.3%, from 48.9%. As we navigate these complex market dynamics, it's crucial to consider multiple perspectives and stay up to date with the latest news and analysis. On the Riskwiser Zone, we're committed to providing you with balanced and unbiased information to help you make smart investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got an exciting middle segment for you today as we dive into the world of real estate. It seems like the property market is heating up, with some impressive sales figures coming out of Melbourne and Sydney. Let's take a look at what's been happening in Melbourne. A young family has just purchased a stunning unrenovated Federation house in Marrickville for $4.5 million. The property, which boasts a 727 square meter site with dual access, was marketed as an opportunity to renovate and restore or to redevelop. It's clear that the buyer saw huge potential in this beautiful old home, but it's not just Melbourne that's seeing some action. In Sydney, a developer has snapped up an unrenovated Federation house in Marrickville for $4.5 million, beating out an underbidder who had plans to restore the property. The site has dual access and is located in a highly sought-after area, making it a prime spot for redevelopment. We're also seeing some strong interest in properties with character and charm. A C1917 four-bedroom Californian bungalow in Dulwich Hill sold for $3.5 million, with all four registered bidders being owner-occupiers attracted to the property's original features and well-maintained garden. It's clear that buyers are willing to pay a premium for properties with unique character and potential for renovation or redevelopment. But what does this mean for the broader property market? Are we seeing a shift towards more buyers looking for fixer-uppers, or is this just a blip on the radar? As always, it's essential to approach the property market with a level head and do your research before making any decisions. Whether you're a seasoned investor or a first-home buyer, it's crucial to understand the current market trends and make informed choices. And that's not all. We've also got some interesting news from Melbourne, where a young family has just purchased a property in Elwood for $635,000. The property, which needs renovation, was sold under the hammer to an investor who plans to hold on to it for 4 to 5 years before potentially moving in. It's a mixed bag out there, folks, but one thing is clear: the property market is always full of surprises. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a closer look at the latest developments in the economy. Inflation has been a major topic of discussion lately, and we've got some updates on how it's impacting consumers and businesses. According to recent reports, inflation has been trending downwards, with some areas experiencing significant declines in prices. For instance, gas prices have fallen by 3.2% last month and are down 7.5% from a year earlier. Additionally, the cost of used cars plunged 1.8% in January, which is the biggest decline in 2 years. However, not all sectors are seeing price decreases. Some services, such as airline fares and music streaming subscriptions, have seen significant increases. Airline fares soared 6.5% just in January, while music streaming subscriptions increased by 4.5%. These hikes are likely to be felt by consumers who are already struggling with stagnant wage growth. The tariffs imposed by the current administration have also been a major factor in shaping the inflation landscape. While some companies have benefited from delayed or scrapped tariffs, others are still grappling with higher costs. A study by the Federal Reserve Bank of New York found that U.S. companies and consumers are paying nearly 90% of the tariffs' costs. It's worth noting that the rental figures have been distorted by the October government shutdown, which interrupted the Labor Department's data collection. This has artificially lowered some housing costs, and economists are urging caution when interpreting these numbers. As we move forward, it's essential to keep a close eye on inflation and its impact on the economy. If inflation gets closer to the Federal Reserve's target of 2%, it could allow the central bank to cut interest rates further, which might provide some relief to consumers and businesses. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.